Hello, welcome. My name is Jackie Jacobs, and I am Chief Compliance Officer at VSS Capital Partners. I am here today with Jeffery Stevenson, our Managing Partner. Welcome, Jeff.
Thank you, Jackie.
Why is the lower middle market such an attractive opportunity for investors in the U.S. private equity?
The lower middle market in the U.S. Is attractive because, number one, it's vast. There's some 350,000 companies in the U.S. That we can potentially invest in. Number two is that these are companies at the lower end of the marketplace which grow faster than the overall economy. And we also see a better opportunity in terms of creating value. And what I mean by that is that smaller companies tend to trade for lower multiples. And if we are successful in building these businesses into larger companies, then we can ultimately exit the investment at a higher multiple. Along the way, we can help them strategically with their growth plans. And so generally speaking, the lower middle market offers a lot of companies better growth and better valuations.
And what is the uniqueness of VSS in this market?
VSS is unique for a number of reasons. One is that we have been at it for a long time. We started our first fund in 1987, so it's almost been 40 years. We were very early on in terms of being specialists in terms of industries. Now that's become relatively commonplace. But we've always been specialists in these industries, which allows us to add value to the companies that we invest in and to understand the industries. Number three is we're hands-on partners with the companies. Through our role on the board, we're able to help them strategically, in particular with their strategy of making add-on acquisitions. So we really work with the companies to maximize the value. That can also be helpful in a difficult period as well as just during the upside, where we can help them work through their problems.
What can investors expect on long-term returns?
Investors can expect stable, long-term, attractive returns. We've generated over 20% now for 20 years. So we structure investments to protect the downside, because over a 20-year span, obviously there are a number of economic cycles that we've encountered and will encounter going forward. And they're also structured to maximize the upside potential. So we're really structuring deals that have a flexible approach where we can both accomplish that downside protection and the upside return.
Through these troubled cycles, how does VSS work through those?
We work through them by being hands-on and by working with company management. So it could be an example of helping them with operations. It could be an example of working them with their capital structure and their balance sheet and their debt. There are a number of different facets where we can be helpful because we've had the experience now of working with 100 different portfolio companies that have in turn done 600 add-on acquisitions over now almost 40 years.
Would you say that VSS is more of a partner with the portfolio company versus only just investing with the portfolio company?
Yeah, so we view ourselves as partners with management. So while we're not operating the businesses, we are working with them at the board level in a way that's hands-on and helping them with their growth and also with some of the issues that they encounter. These are entrepreneurial companies that may be doing a roll-up strategy where they're buying and building for the first time, whereas we've done it literally with 100 different companies.
Thank you, Jeff, for sharing your thoughts with us today.
Thanks, Jackie.